Hey guys, what's up? It's your man Pete, and we haven't done one of these in a while. We're going to do a mortgage market update here in early part of 2021 in January. And again, we've got one of our favorite guests on the show, which is Richard Tartaglia of the Vine Group, who specializes in financing mortgages for investors specifically. But if you're just a regular homeowner, you can certainly give him a call as well. But today, just wanted to welcome Richard. Richard, welcome back to the show. Thanks for being here. Uh,
Thanks
how's
for having me on. It's
how's your new year been so far?
been a great New Year. I don't have any New Year's
We're all,
resolutions.
well, we're all
Didn't
locked down, right? So there's a lot going on, but
yeah. I think it's the regular, like eat better, exercise more,
yeah,
and help more people.
yeah, absolutely. So, I mean, I think the real estate market's sort of gotten off to a bang this year. I
Yeah.
mean, because people have a lot, like the people that can afford to buy, they have more disposable income to work with. Some people are seeing the market as an opportunity to get in because there's some opportunities specifically like downtown condos here in Toronto.
Mhm.
And I think people are just buying out of boredom too. There's nothing else going on. So no vacations, no shopping, no entertainment. So what's the hobby du jour? I guess it's buying real estate right now. So I mean, are you seeing some of that in the mortgage market with your clients, Rich? Or
Yeah, I mean it's been a tumultuous 2020. We've recently had an update with the Bank of Canada. Interest rates are at historic lows. There's a lot jammed into what is the mortgage market currently, why we're here, and where we're potentially headed.
Mhm.
Uh, there's a lot of people taking advantage of current conditions. There's opportunity out there still, and it's tough to kind of block out the the media, but let the right type of information come in. So hopefully, we can shed some light on that today.
Okay, so I mean, as it stands right now, before any announcements, like what is the prime rate right now? What is the Bank of Canada's lending rate? Like, if you could just highlight those quickly so we have an idea.
Yeah. So the prime lending rate is set individually by each lender. The Bank of Canada sets its overnight lending rate, and in March of 2020, we saw a 150 basis point drop, so 1.5% drop in the overnight lending rate, brought
Mhm.
all prime rates down. And now, currently, with most lenders, it's 2.45 the prime lending rate, and variable rates are based on prime. So that's the basis of a variable rate.
Mhm.
And most recently, with the Bank of Canada update, they shed light on what. So that 8 times a year, they update the monetary policy and they set that overnight lending rate.
Right.
This most recent announcement on Tuesday of January, I believe it would have been 20 or 19th, it was updated, and they've just sort of given us runway and reiterated the existing sort of outlook of the market.
Okay, so I think what are we at right now? Point five as the overnight lending rate, or is it point two
So
five? Like
0.25, yeah.
0.25. And then, so in the announcement, did they say they were going to try to lower it down to zero, or?
So there was talk of the potential micro cut to the overnight lending rate. That didn't happen. I think that this was the most opportune time to do that. If they were going to do another rate cut, they've said it's going to stay at this effective lower bound until the market picks up economic slack, and so that we can be on target to reach the inflation target.
Mhm.
That was reiterated. So they've said it in the past that they're going to keep interest rates low for a long time. They've always sort of outlined that it's going to be till 2023. They reiterated that, and they doubled down on that. And they quoted the vaccines, the rollout, and how the process of the vaccines is going to take effect. And if we see enough economic growth, we could see that potential economic ease off at the end of 2022. So
Yeah.
this is a really good time for variable rate mortgage borrowers. you're going to enjoy this environment for at least, so that it's between 12 and 24 months, I
Mhm.
think is very, very safe to say that we'll have that environment.
Okay, so the idea behind, so for someone who's, maybe not an investor. I know you focus more on investments and, people who are buying multiple properties, right? But so for example, the person who's just trying to get in the game right now, they want to
Yeah.
buy their first place, in the range of 500, 650,000, something like that. Just try to take advantage of the condo market, especially the downtown one. What kind of rate, or what kind of sort of opportunity are you seeing for them based on these current conditions? And what's the structure? What would you recommend as a structure in terms of setting up that mortgage? So should they do variable for like 2 years and then lock into something fixed after that, or like what's your recommendation on what they should do?
So as an investor, investors tend to focus on cash flow, and you may be a borrower that has an existing mortgage, and maybe you want to take advantage of breaking that mortgage, looking at pulling some additional money out. Maybe you want to access some down payment funds, for example. Uh,
Hmm.
this environment that we're in, there's an opportunity for that, uh, where you could potentially go to lower rates, access some more funds, and free up cash flow. For example, on $1 million mortgage, pre-COVID, if your rate was 3%, if it was, and then you would have seen the 1.5% rate drop.
Hmm.
Now your payment to that mortgage would be $750 less. So those investors, how would they take advantage of it? Potentially, acquire a new mortgage, and depends on your life goal. So, is this property going to be something that you plan on holding for a long period of time,
Hmm.
or is it going to be a short-term type of investment? Are you somebody who's very risk averse, or are you somebody who's a risk taker? That is all something that we would have the conversation about, and see if variable rate strategy might be the right move. There is this 7 years, 8 year strategy of taking a variable rate and then locking it into a fixed rate before rates go up. That's something we talk about, and different lenders allow you to do that in different senses. So basically, it's about the client, and we'll help you find the best fit solution.
Okay, well, what is your gut feeling, right? So like what
Mhm.
would you recommend? Let's say we're expecting a 2 year, low interest rate environment, like, so no increases for the next 2 years. Although usually, again, like you said before, like, they'll give like projections, and they'll say, yeah, we're not going to raise interest rates, and then a year later when things improve, rates are up again, right? So
Yeah,
it's kind of like that forward guidance doesn't really, is not it's always malleable, right? It's changeable, right? So if that's the case, if we know things like that, let's say, so they're saying, low interest for what, at least 18 months, maybe 24 months, something like that. What's your recommendation for people to set up their mortgage? So should they go for like a 5 year fix right now, try to take advantage of the low rates and just lock it in? Or should they,
yeah,
play around with variable for a couple of years and then sort of respond to, Bank of Canada news, right? Like
yeah.
what's the best strategy here at this point in time, based on your experience?
Based on my experience, take a good look at your risk tolerance. If you're somebody, assuming that the risk tolerance is there for for this individual, a variable rate penalty is much less than a fixed rate penalty. You
Oh,
keep
okay. Yeah.
options open with a
Mhm.
variable rate.
Yeah.
I personally like the variable rate right now.
Mhm.
There have been studies done, however, that at the lowest rate in historically, if you were to have taken a fixed rate, you would have done better than a variable rate at that time, assuming that you didn't change the variable rate along the path of the 5 years, if it's a 5 year term we're comparing.
Oh, okay. Yeah.
So personally, I like variable because you keep the options open, and you're not locked into this sort of penalty situation if you want to switch lenders. But it could, if you're more conservative, consider fixed. If
Yeah.
you're a little more risk and you want to keep control of things, go variable.
Is there kind of a hybrid model these days too? Like, does that
Yeah,
exist? Or
there are hybrid models. You could, let's say it's a $500,000 mortgage. You could split it up into components. many lenders do allow you to do this: 250,000 as a fixed, 250,000 as a variable,
Oh,
and there's different advantages to having that. So you could, just like an investment strategy, you could look at diversifying your borrowing strategy.
yeah, absolutely. Yeah, I didn't know that
So
that existed actually. So, I mean, is that hard to qualify for? Is that hard to get, or is it not
no,
popular? Like nobody's using it, or
I think it muddies the water a little bit for somebody who, because borrowing tends to get complicated quickly,
Mhm.
and you have a line of credit and a credit card, and you might have overdraft protection, and then now you have two mortgages or three or four, and then it can become complicated. If you're doing that diversified strategy,
Yeah.
try to get the maturity dates to align up so it becomes less complicated, uh, because
Okay.
then
Okay. You're already getting too complicated for me. So let's not get into that. Let's not. I left accounting for a reason. So okay. All right. So we got through fixed versus variable. What is the best for existing mortgage owners, new homeowners, or investors? Well, I mean, let's just go right into it. So how can borrowers take advantage of this rate environment right now? What are the tip? What are some tips and strategies that you would recommend in order to take advantage? Like, how could you sort of get rock bottom rates if you are, for example, somebody who works at a job, very stable, good credit, not a whole lot of debt, versus
Mhm,
someone who's maybe self-employed, and so their income is not as verifiable, things like that. But like,
mhm.
just some simple, quick things that people can do to get the best rate and take advantage over the next 18 to 24 months.
Yeah, so the current rate environment, we're seeing a lot of refinances. So people who have existing debt, if you have an existing uh, debt, let's say you have 500,000 loaned to you, you paying this monthly mortgage. You might have bought at the end of 2018,
Hmm.
maybe mid 2018, and your interest rate at that time was close to 4%, maybe 3.5, in that range. Look at potentially taking advantage of what is available to us in the market today as a result of COVID. Uh,
Hmm.
you may pay a penalty. You might have something else that we can look at consolidating. But when you do the math on that type of a transaction, you open up options. So you may have had this mortgage where you've been keeping up and keeping your head above water, and this for you is causing you stress, or something's changing in your life, and uh, you may need to reduce payments, or maybe you just want to keep the same payment and take advantage of the low interest rates.
Yeah.
We can do the math to show you exactly how much you would save over time, if and we can make assumptions with that type of an analysis. So uh, you take it, do you go from fixed, and do you go to variable, and then we look at things in 2 years time. How much have you saved despite the penalty? What
Hmm.
have we consolidated,
Hmm.
uh, and how have we saved you money and put you in a better position financially? So that's been a big part of our business in 2020, is was to look at these existing debts and see how people could have taken advantage. A lot of these clients are in much better financial positions as a result of
Hmm.
having taken advantage of what's happened. And
Absolutely.
we
Yeah.
have runway. We don't, this is unusual that the Bank of Canada has said that interest rates will stay low for a significant amount of time.
Hmm.
So put your thinking cap on, and try not to be naive about your existing mortgage. You should have a annual review with your mortgage specialist
Hmm.
to just you know look at how you could potentially improve your financial situation.
So are you saying take advantage of getting some secured debt to pay off some unsecured debt? Is that what you're saying,
Sure,
or
sure.
is that what you're saying? Is that what's common right now? Is that you're seeing a lot of people doing that, and then maybe also
Yeah,
refinancing to buy other properties? Is that what you're saying, or
yeah. I had a call this morning with a gentleman who wanted to buy a used car. The vehicle that he wanted to buy didn't offer financing for it.
Hmm.
He has an interest rate of 3.89% on a 5-year fixed.
Hmm.
It's an $18,000 penalty to break it, but we're taking him to a 1.5% variable and combining the money that he would have used to pay for that vehicle. And
Yeah.
now he's also gone through a separation. He has some payments to make, and we've actually improved the cash flow situation for him. He wanted to pay less to his debt,
Hmm.
and he is in so much better of a financial position to be able to continue on with life and meet his savings targets. We did a cash flow analysis to see what he's expending every month, and he's in a much better position. So this for him was a really solid move. We looked at it 2 years down the line on how much interest he would have paid despite the penalty, and he was saving a net $10,000.
Mm. Okay. Yeah, that's yeah, it's great. I mean, I think oftentimes, it's easy to get carried away, in terms of spending and sort of going beyond your limits, right? Especially, when buying something is really just a click away. And so, it's easy to get out of hand with things. And, I think a
Yeah,
lot of people don't understand that sometimes, mortgage people, they're not necessarily doing mortgages per se. What they're doing is sort of a financial audit, and then they look for solutions to help you minimize your payments. So it's almost like a financial consultant in some way, right? When you're really in a bind and you need solutions and you need different avenues and ways to pay for things, mortgage brokers and mortgage agents can handle. They can do that kind of thing for you, right? Don't get me
yeah. I
wrong.
mean,
I think banks can do that too, but I mean, I guess you guys have more ways and avenues to access funds and to sort of problem solve the solution, right? To engineer the solution for people, right?
yeah. Will locate the lender that fits best for the client rather than you go to one lender and those are the options that you will get. There's a finite amount of them.
But I think with you, I
What?
mean, I work with you, so I know
Yeah,
that for you, whenever I bring clients to you, or you're trying to look at the whole financial picture, you're trying to figure out a solution that works best for them, like just like what you talked about earlier, right? And then
yeah.
in the end, they end up saving more, or it's just they're not sinking too deep into debt, right? And then you can help them find a way out before it's too late, right? So
Yeah,
there's
often a lot of the work that we do can involve with keeping somebody in their home that they don't want to transition out of, or there's so many different situations that people uh, find themselves in, and every person's different.
Yeah, I mean,
Um,
it's nice to have a financial coach, right? It would be nice. I mean, it's very personal in nature, obviously, but
yeah,
you
that's
know,
very personal in nature, and
yeah,
we go very in deep with the information that. So yeah, it's a very intimate sort of conversation for sure.
there is absolutely, yeah. But you need to provide that information so that they can actually help you, right? So the mortgage
Yeah.
broker and the mortgage agent can actually, figure out the solution. So, okay, well, we're gonna sort of keep an eye on what's happening in the market. Obviously, the real estate market has been off to a bang. I don't think there was any surprises to that because Toronto has always been that way. But it turns out that with the lockdown and COVID, everything happening at this time right now, I get the sense that the market is off to a start, like it's off to an earlier and more aggressive start. Obviously, that's partially triggered by the interest rates. It's partially triggered by the fact that there's really nothing else to do. And working in this business, we are considered essential because we're dealing with people's home and shelter, right? So,
Mm.
so I guess last question for you, Rich. Are we going to see another rate drop in the next 1 to 3 months, or you think they're done for now?
I think they're done for now. I think that if there was to be a cut on the table, it would have happened last Tuesday. There was a good story to lead up to a rate cut,
Mhm.
being that unemployment numbers were down, Canadian dollar was strong, the second lockdown from the pandemic,
Yeah.
and the fact that vaccines were yet to be determined how they're going to roll out. So I
Yeah.
think we're past that potential, and that's generally what the market has said.
Yeah.
So what I think will happen is will see low rates until the end of 2022. The Bank of Canada has said until, well, we're quote unquote into 2023 that they would start potentially raising rates at that point. But the Bank of Canada tends to be less accurate than the market predicts them to be. So
Exactly.
they're
Yeah,
usually a
yeah.
bit, just like you said. Yeah. So
Yeah, they're responding to what's happening in the market, right? It's not really, I don't know if it's necessary that they're dictating the market. They're sort of more responding to what's happening to the market, right? So if they're saying, end of 2022 or end of 2023, I mean, I think based on my past experience, whenever they've done that, it's always been they've shocked the market earlier than the last guidance was going to be, right? So, uh, you
no
know,
one knows is and many people say, oh, nobody has the crystal ball, but the reality is that I think we're in historic lows, and hopefully we stay that way with interest rates.
yeah, so now's a great time to consolidate, right? Consolidate the debts and refinance. So how about appraisals? Really last
Yeah,
question. This is
yeah.
this is more personal for me because I work with some clients. They need appraisals. Um, appraisals more conservative, less conservative. Are they causing issues in financing these days?
When I work with clients, we do the appraisal right away. We don't wait for the appraisal. Let's say you buy a property, we want to be ordering the appraisal the same day that you buy the property. That way, there's no potential fluctuation in the market from when you've
Mhm.
bought and when the appraisal gets done.
Yeah.
I've seen it in the past where there's a lag of time, and then we add complications because maybe the market has fluctuated. If you're doing it right away, appraisers are going, and you've bought a property, they're going to do everything that they can to match the fair market value to the market value that you bought it for,
Yeah.
and because you've bought it for that property, so they're going to really strive on purchases to get that value.
Yeah.
And I haven't seen personally properties coming in undervalue on purchases.
Yeah.
On refinances, sometimes clients think that their property is worth more, and then they're sort of, when it's a refinance, there's no set market value.
Yeah.
Uh, they've There can be a little more room to be surprised on a refinance versus a purchase.
Versus a purchase. Okay, got it. All right. Okay. Yeah, because it's just interesting to see because the condo market and the housing market are responding completely differently, right? So
Mhm.
houses, low inventory, low interest rates. There's just really no ceiling for houses. There's like they can just go as high as whatever. And so
Yeah,
you may have some appraisal issues there if you get into bidding wars that are a little bit
yeah.
too aggressive, right? But
So bidding wars are, and you see it right with Toronto.
yeah.
You have to be careful with bidding wars, because if they get really too out of hand, it could an appraisal could become an issue.
Yeah, and then on the condo side, are appraisers, downgrading their financing and their numbers because they think that it's going to continue to dive longer. So they're responding differently. I don't know. I mean, I don't work directly with the appraisers myself. I know you do, but I think that's
Mhm.
definitely going to be something important to keep an eye on this year, because in the market in Toronto just constantly keeps changing and shifting all the time, and
Mhm.
everybody's just trying to keep pace. Real estate appraisers, mortgage people, everyone's just trying to stay abreast of what's going on in terms of the prices, right? So that's definitely going to be a story that we're going to have to keep an eye on for the rest of the year, because if you're getting into crazy bidding wars and they're not willing to lend you on that amount that you've written up for,
Yep.
then that could pose some issues, right? That could pose some
Yeah.
deals being fallen through and stuff like that. So definitely something we want to be a little bit conservative about and keep an eye on. So that'll be
Yeah.
interesting. I guess we'll catch up with you maybe a few weeks or a few months down the line and see how that's going. But yeah, thanks for being on the show again, as always, Rich. Fantastic information. Again, we touched on the fact that mortgage agents are not just mortgage agents; they sort of become your financial consultant, especially if you're in a bind and you need to access some cash or just release some money from your property. So if you guys have any questions, you need professional help from a financing and lending and mortgage point of view, Rich's email is going to be in the description below, and feel free to contact him. And then when you're ready to move on to the properties, you know who you're gonna call, right? So that's how it goes here at Selling Toronto and the Vine Group. I wish you the best of luck for the rest of the year, Rich, and
Thank you.
hopefully it's just going to be gangbusters from here, from a business point of view. So
Yeah, thanks, Pete. Thanks for having me on as always.
as always, okay, we'll see you in the next one, Rich. Bye for now.
Okay, cheers. Bye.